Welcome to another edition of John's Hazy Crystal Ball for October 1st, 2021. So here it is. We still have great fall weather. Apparently the Farmer's Almanac states that we're going to have a late winter, so let's hope for that. I know it's raining like crazy in BC, and once it hits the mountains, it turns into snow, and after that, we get a wicked winter. So anyways, with regard to real estate, the Calgary Real Estate Board recorded a virtual high for September sales. Their total residential sales totaling 2,162, which is units short of the all-time record for September back in 2005. So the demand has unexpectedly continued to be very strong for 2021, at least up until this point in time. Typically, we see sales trends falling once the late summer, early fall comes around. And typically fall sales are always slower by about 10 to 15% than what we see in the spring months. However, the continued strong demand is basically, we feel, driven by continued demand from the buyers who weren't able to buy homes earlier this year due to the lack of inventory, multiple offer situations. So basically you have 14 offers, only one family gets it, 13 are on the outside looking in. So basically those people who were not able to transact earlier were now successful, or are being successful, in finding new residences. The current market continues to be very favorable toward the sellers, but conditions are not as tight as they previously were. Effectively, there are slightly fewer buyers, and inventory levels have dropped as well, but not nearly as much as we typically would find for this time of year. The inventory levels have dropped, as I mentioned. However, overall, we still are below 3 months of inventory. For detached homes, we're still under 2 months of inventory, which is next to nothing for Calgary and area. Apartment condos, however, are still at over 5 months of inventory, which is an extension of the lack of demand for that marketplace, as well as excess inventory. Calgary, as I mentioned, recorded 1,268 transactions, which is 30% greater than the long-term average. And we expect this number to drop marginally over the next quarter, October, November, and December. But typically we'd see numbers between 800 and maybe 950 as max. We still think that we might be reaching mid-nines, even 1,000 units per month for the next 3 months. Year to date, sales values have increased anywhere from a low of 5% to as high as 12%, depending on the community and which quadrant you're in. Again, these increases were typically seen in detached homes, a number of attached and townhouse-style units, and once again, apartment-style condominiums are flat, and in some cases even dropping in value. Interest rates, basically, we have always been saying Q3, Q4 next year, 2022, expect to see increases in the fixed term interest rates of at least a quarter point every quarter. That's 0.25% for every one of those 2 quarters. As of yesterday, TD Bank increased their rates by 35 basis points. So that means to say that's for a 5-year term. So you can see the other 5 big banks, big 6 as we call them, increasing their rates. And that might mean say their increases could happen earlier than even next year. However, the thing is, the banks have a lot of money because people have been saving money, not spending as much here for the last 15 to 18 months during the COVID pandemic. So therefore, they want to get those assets off their books and lend them out. So there's a little bit of hesitancy for the banks to follow the bond rate, which has increased, and increase the interest rates, whereas they want to basically lend out the money at low interest rates and then jack it up. Bottom line, we're very bullish insofar as what's happening over 2022. We anticipate prices for homes are going to increase anywhere between a minimum of 5 to 8% or more. In fact, later this month, you'll see in this newsletter, we're inviting you to join us with a special presentation from Anne-Marie Lurie, the Chief Economist at the Real Estate Board, where she'll be talking about what's happened for the first 9 months, both economically, sales-wise, where interest rates are going, where our workforce is, where it's going, where migration and this basically where it's coming from, and what we anticipate for basically salary increases and things of that nature overall. And what I mean by salary increases, in the energy patch, we lost a lot of jobs here over the last 5-6 years, where we lost $200,000, $300,000, $500,000 a year salaries, and now they're hiring a lot of $75,000 to $100,000 salaries to replace those. So they're saving a lot of money. And what I mean by salary increases is when people are coming in, if it's basically mostly in the service sector, like the restaurant industry, etc., we're getting a lot of people coming in low-paying jobs versus the people who are getting paid 100, 200, 300, etc. So that directly affects the dynamics of the real estate marketplace. Beyond that, Anne-Marie is going to be talking about what we foresee for the last quarter of 2021, and then our projections for next year. It's going to be really exciting. Should you not be able to attend, we will be recording it, and you can listen to that at your leisure thereafter. If you have, whether or not you are able to attend or not, send us the questions you'd like us to ask Anne-Marie to have included in her presentation. We'd be more than pleased to have those included. Anyways, that's the quick and dirty for John's Hazy Crystal Ball for the month of September and a slight forecast into the future. Look forward to talking to you next month. Cheers.